Hello, and thank you for joining us here on the floor of the New York Stock Exchange for this week's MacDesk Floor Report. Today is Thursday, June 14th, and we are up 107 points in the Dow. This drift into positive territory in early trade today doesn't really do justice to the level of uncertainty pervading the global economy today. Yesterday, Moody's downgraded Spain's sovereign debt from A3 to Baa3. This is just one level above junk status. The move was echoed by Egan-Jones, which downgraded its own rating on Spanish debt for the fourth time in almost as many weeks. The twin downgrades put pressure on equity markets overnight as yields on Spain's 10-year government debt hit 7%. Ouch! The 7% threshold has been tipped as a crisis level for Spanish debt, and the market didn't like that at all. Elsewhere on the periphery, however, Italy was able to offload its 3-year notes. This was the first time that Italy had gone to market with its government debt since the Spanish bank bailout request. As one might expect, yields were significantly higher at this morning's debt auction, coming in at 5.3% against a previous 3.9% in the 3-year. 10-year notes in Italy were yielding 6.16% this morning. A lot of analysts this morning weighing in on what the situation in Spain might portend for Italy. On the brighter side, if you're looking for sort of glass half full perspective, some point to the fact that Italy is not bearing the burden of a leveraged real estate bubble and has a little more discipline over its fiscal deficit. That may be cold comfort, however, given the broader European quandary right now. Not surprisingly, buyers did target 10-year debt on the safer haven German bonds and UK gilts, with yields on both easing off this morning. Here in the US, the pre-market data ticker was not particularly encouraging either. Weekly jobless claims came in higher than expected at 386,000 claims. The market was looking for 375,000, but the number came in higher against an already upwardly revised number from last week. This has some segments of the market leery that we are heading back toward the 400,000 mark, a threshold that took us a good long time to break below. The Q1 current account deficit figure was also released today. This came in at $107.3 billion. That was a substantially larger number than analysts had been expecting. And we had a slight decline in May's CPI of 0.3%, although the core number increased a little more than analysts were expecting. Best as we can tell, the upside action in the broader indices is the result of fairly nimble market action, as another day of disappointing economic figures give rise to speculation that the Fed will be urged to take action, whether this takes the form of a more aggressive quantitative easing program or simply an extension of its balance sheet neutral strategy known as Operation Twist. Bear in mind that we are on the eve of a quadruple witching expiration on Friday, and we're heading into a pivotal election out of Greece. Monthly and quarterly options expiring tomorrow do not protect market positions through the election, so the action heading in tomorrow is going to be interesting to watch. For now, the spot reading on the VIX is coming in about 1% lower at 23.95, with VIX futures across the contract table coming in a little bit, roughly half a point across the curve. We'll see how long that lasts. It promises to be an eventful weekend out of Europe, and I suspect we'll be dusting ourselves off a bit ahead of next week's report. For additional market insights, be sure to check your inbox for the midday. For now, that's it from me, Rebecca Darst for NYSE Euronext.